US President Donald Trump says he will impose 25% tariffs on pharma and auto, spooking stocks in early trade, but the low likelihood of him following through on this given implications for US consumers sparks a reversal.
The Port Talbot Council clears Tata Steel's proposed investment in an EAF, that's electric arc furnace, at Port Talbot with an investment of £1.25 billion, including a grant of $500 million from the UK government. The stock perks up.
Hexaware marks its return to the bourses with a listing at a premium to the offer price of 708 rupees per share. The strong listing despite muted subscription of less than 3 times with high institutional interest.
Sources tell CNBC-TV18 that Bharti Enterprises will use the proceeds from the sale of shares in Bharti Airtel on Tuesday to refinance its acquisition of British Telecom. Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. And Manglam, in a long while, we haven't had this sort of a screen, particularly at midday. So pretty good. You know, normally we focus on the first few hours, that checking on margins, what's getting triggered, where it's getting triggered. Not too bad today. 23,000, the bulls will take it.
We spoke at 10:30. The Nifty was 23,040. It's managed to hold on to that 23,000 mark, so that's a positive. Between 10:30 and now, what has changed is the mid-cap index. You know, It's done even better. At that time, it was around 1.2% higher. Now 1.7% higher, with a lot of stocks actually making highs of trade. Look at BEL. You know, it's a frontliner, doing a lot better. L&T, a lot of these cap names or capital goods names are doing a lot better. And then we have a lot of the capital market plays as well picking up. We have Angel One, which has moved to the high point of trade. A lot of long positions being added on BSE as well. So we'll keep an eye out on markets as we progress. A good recovery from lows is what we've seen in today's trading session after a big drubbing that we've seen in broader markets as well. But let's focus on the auto space, and that's because, you know, everyone's buzzing with the idea of Tesla coming to India. Following Elon Musk's meeting with the Prime Minister, electric vehicle manufacturer Tesla is looking set to make its foray into India. We understand retail operations could start soon. Parikshit joins in with the details. Parikshit, earlier you had pointed out that they're looking for, employees for their retail ops in India, and now you gather that they may start soon.
That's right. We're learning from sources that they could start operations as early as April this year. And this could mean that they would import cars from Berlin and sell them in the Indian market. We also learned from sources that Tesla has zeroed in on locations in AeroCity in Delhi and BKC in Mumbai for starting company-owned showrooms. This had been the plans for some time, and Tesla had been scouting for locations in India last year as well. So the idea is to start retail operations as soon as possible and then consider and lay out a roadmap for manufacturing in India, something that the Indian government wants them to do. Now, what we're also learning is that the US automotive industry and also Tesla believe that India's tariffs on fully built cars could come down even further. Currently, the import tariff on fully built cars into India is about 70%, and the government believes, and the US government believes, that because of the threat of reciprocal tariffs, several countries, including India, may further lower their tariffs on automobiles. So this is what Tesla is hoping for, and these reciprocal tariffs may kick in from the 1st or 2nd of April. So this would coincide with their India entry. We're also picking up that Tesla is significantly going to increase sourcing from India this year. If they are sourcing about $1 billion from India, next year it could be even more. So let's see what happens. But clearly the plans are afoot and the hiring is taking place to begin retail ops as soon as possible.
Take that point, Parikshit. Thanks a lot for that. What stood out for me was the fact that it would start its operations in Mumbai in BKC. They've identified a showroom around BKC itself. Nigel, not too far away from your house. It is, very close to the Apple store as well. So maybe, when you're going down to buy an Apple phone, might as well look at the Tesla car as well. Not too expensive given the first, rates that are coming in, 25,000. That would mean about 21 lakh rupees.
That tells us about the phase of life we are in, Manglam. You're saying it's not too expensive. For me, it is very, very expensive. So I would love the car.
No, I meant not too expensive for you.
I've been very, very lucky to have driven the Tesla in the United States, and I'll appreciate the car and appreciate all the beautiful vehicles that we're going to be seeing on the road. But for now, it's left at appreciation. And neither will I be buying a new Apple phone. But Mangalam, that's the phase of life you are in. And I wish you well, brother.
All I can say is, the only time I sat in a Tesla was when I was in the US and I booked a car. I booked an Uber. And that is when the Tesla came in and I was happy not driving it, just sitting behind one itself. But whether that will, cause flutters among Indian players or not, we have Mahindra Group CEO and Managing Director Anish Shah telling us that the company is happy to have competition in India. He spoke to CNBC-TV18 last week. He joined us in our studio, and this is what he had to say about Tesla's entry into India.
We are happy to have competition in India. It will help the electric segment grow as well. The key for us, as we've always maintained, is that what we've seen the government do is take all actions that essentially foster make in India. That's the most important part. If India becomes a dumping ground for the rest of the world, whether it's in steel or automobiles or anything else, that's going to be negative for the economy. So as long as every maker in the world is making in India, that's a better outcome for us.
Okay, all right. Well, let's get in Gurmeet Chadha, Managing Partner and CIO at Complete Circle. Hi, Gurmeet. Good day, and thanks a lot for coming on the show. Gurmeet, what do you think? Yeah? I mean, everyone over the weekend was celebrating what Mahindra & Mahindra has done with that EV launch, appreciating the numbers, and bam, the stock is down 10%. You could say that maybe the street wanted a higher number, which I don't know how probable would that be, or the fear that Tesla could come in and disrupt the market. What do you think?
Hi, Nigel. Always a pleasure. I think it's the latter. I think it's the Tesla's announcement of hiring and setting up showrooms in Delhi, Mumbai, and a few locations to begin with, and President Trump talking of tariffs on auto. So it's a bit of a combination. I don't think so. It's an apple-to-apple comparison. You look at Tesla's revenue mix. Automotive is 77-78%. Battery storage services is the next 13%. And if you then take leasing and energy credits, etc., and then they have different plans on CyberCab, which is the $25,000 segment, which are the robo-cabs and autonomous driving. M&M, on the other hand, is a completely different ballgame. 55% is automotives and 23-24% is farm equipment. 11-12% is financial services, and the balance is industrial. Also, the best-selling model for Tesla globally used to be Model 3 last year. This year is Model Y, right, which is roughly priced at about 70-80 lakhs. 70x showroom, which means about 80-90 lakhs. And here the best-selling model is Tata, which is Punch, and Nexon, which is around 14-16 lakhs. So I don't think so the price points really match. Even Model 3, the price would be more upwards of 40 lakhs. So I think the price points are much higher, and they are just launching. The bookings will start, the ecosystem will develop. They are still not making here. They're just promising to secure components here. So I think it's a bit of an overreaction in my view. And the size of EV market in India, we sell 40 lakh cars a year. EV is not even 5% yet. We haven't sold 2 lakh cars last year.
While you say there is overreaction, would you then actually be realistic and maybe perhaps borderline greedy and look to buy into these dips as well, Gurmeet? Because typically what happens, and this is what we've seen through experience, not a lot of foreign players in a lot of segments have been very successful in India. We've seen that with retail, barring QSR, where you have, McDonald's and Domino's doing well in India, that too with Indian franchisers. We haven't seen a lot of foreign brands actually succeed in India. In automobiles, you have Hyundai, which has done well, but then again, because of the massive ecosystem that they have in India and the price points at which they are. So would you look to buy this dip, because Tesla's entry may actually, like Anish Shah said, grow the ecosystem, grow the infrastructure, and pave the way for the lower priced models to actually see a better sort of volume growth?
Absolutely. And as I said, it's always a win-win. When we were in banks, we had foreign banks coming in. When I was working with Reliance Mutual Fund, which is Nippon, we used to say that Fidelity and Franklin will take away all the market. It just happens. Even, then there is this offline-online debate. Among them in India, 50 crore people have never ever been to the mall. And we are still discussing e-commerce versus offline. So I think India is a very complex, different market. And I think the entire ecosystem will grow. Tesla coming here. See, China, the reason for BYD's success is the battery cell and the overall ecosystem. A good player coming in actually strengthens the ecosystem. The adoption will pick up, the awareness will pick up, the tech know-how will pick up, because a lot of the sourcing will happen domestically. So I think it's a win-win. There's no need to be negative on M&M or Maruti and suddenly think that Tesla is going to come and overnight things are going to change. Maruti, mind you, people have been so negative, still commands almost 50%, 48% market share. So I think different market, different price points, different revenue mix. I think it's a win-win. And any weakness in M&M especially, which has done so well, their market share in tractors is now 44%. In 3.5 ton and less LCV, they're almost 50%. In SUVs now, they're almost back at 22, 23%. Overall improvement, good asset allocation. So I'll be constructive on M&M if it's more focused towards M&M. And as I said, it's a win-win. It's not this versus that.
Okay, all right. What about Tata Motors? Since we have you on auto stocks, Tata Motors has come down 40% from the top. I was reading a CLSA note today, and they were saying that the valuation that the street is giving to JLR is around 200 rupees, while they are giving it a value of around 400 rupees. So do you think post this correction, you like Tata Motors as well? And in the pecking order, how would they place? You briefly spoke about Mahindra & Mahindra, Maruti, as well as Tata Motors. How do you place them?
So in that order, I think M&M and then Tata Motors. And, typically we don't buy stocks when they are 40-50% down and write obituaries around them. I remember it was sub 100 in COVID, and the same was written. I think there is a structural change happening in Tata Motors. I think once the US and China numbers pick up, right now there's a lot of, headwinds in terms of how Europe is doing. China is now supposed to be coming back. China is the largest market as far as margins go. If you look at their order book, especially the mix, it's very favorable. The Defender Sports and the RR mix is increasingly becoming better. They're cutting debt. At some point of time in India, there will be some value unlocking with the EV segment getting hyped off and commercial vehicles and passenger segment also. So there's a bit of a unlocking happening with the restructuring which will happen in Tata Motors, and it's transitioning from from a pure play ICE to in fact right now it has the best powertrain. It has diesel, it has EV, it is now getting into hybrid, and there are a lot of new launches coming, even the SUV front. So I think it would not be right to write it off below 700, and I think I'll be very constructive. But in the pecking order, as I said, M&M and Tata Motors, I'll become more constructive when the broader macro indicators like the CV numbers, the overall cap growth, the government spending picks up. So at the CV thing, which is right now dragging also a little bit.
Right. Just finally, before we let you go, when everyone looks for gold, you sell shovels, right? So if everyone's looking at the EV space, are there any auto ancillary plays that may benefit from the ecosystem increasing and Tesla's coming to India?
Also, I think we've written off completely auto ancillaries which are only into IC engines. Remember, after India, Ukraine was the largest supplier of auto components. And technically, because of EV and clean energy, there is very little capex which has happened. So I think if you see, there are a lot of auto ancillaries where they are doing a lot of good stuff on the overall component system. So whether it is Uno Minda, it's corrected 30% plus from the peak, despite posting about 250 crore PAT. It's getting into JV in terms of making some new equipments on auto. So they are in everything. They are in the accessories, which is your touch screens and airbags and car seats. And then they're also in the switches and horns, which is the lighting business. Then you have something like a Sandhar technology, which is now making a smart lock. And I would be also looking at something which is, making into battery storage and how this EV ecosystem, evolves. Because I think India will continue to be a hybrid market. It will be a combination of maybe, the regular ICE, hybrid, CNG and EV. It will not be one way like other markets have been.
Okay, all right. Thanks a lot, Gurmeet, for joining in, giving us your take in terms of the auto stocks as well as some of those auto ancillaries. By the way, as we're having that chat, there was a flash at the bottom of your screen on Maharashtra Seamless. We're seeing increasing trends at some of these stocks that have come out drastically from the top. There is some kind of promoter buying, and even on Maharashtra Seamless, close to around 5.5 lakh shares have got bought by the promoter, and that's over the last 3 or 4 days or so. So that's the disclosure on the exchange. And as we speak, the stock is more or less flattish. Though if you pull up, a longer term, you'll see that it was at around 900, 950 rupees. And from there, Maharashtra Seamless has seen a bit of a pullback. So promoter buying some kind of support coming in there. The sheet normally likes that. Okay, all right. Well, time to slip into a short break. But as we do that, here is some good news for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or scan the QR code that comes up for you on the screen in just a bit.
Welcome back. You're watching us here on Halftime Report. Let's get you our special Insight Edge segment. This morning, we spoke with the management of Transformers and Rectifiers India, the stock which is surging in trade today. What was the insight that Vamakshi got from the conversation with the management? She's bringing it to us. Vamakshi.
Well, Mangalam, the management sounded fairly optimistic. They said that, with the current order win coming through of 166 odd crores, the order book now stands at 4,200 crores for the company. In fact, they also highlighted that the STATCOM transformers will be delivered in the next 15 months. They have a revenue guidance of nearly 2,000 crores for FY25. This is expected to rise to nearly 3,500 crores in FY26, and their net profit is expected to come in at nearly 500 crores over the next 2 years. Now, talking about the demand-supply gap, what the management highlighted is that demand is far overshooting supply. They said that in the country, the demand for transformers stands at 4.5 lakh MVA and the supply stands at nearly 3.8 lakh MVA. So there's a supply gap of almost 70,000 MVA. In fact, they also highlighted that 18,000 crores of inquiry is under pipeline. They expect a strike rate of nearly 20%, which roughly translates to 3,600 crores of order inflows over the next 2 quarters. So that bodes well for the company. Now, what they've also highlighted is that they are moving towards 100% backward integration. This in turn has a positive effect on their margins, and they're expecting margins to improve to levels of 15 to 16% in FY26. So overall, when you look at the commentary that came through from the management, they sounded quite optimistic. And let's also go ahead and listen into some snippets of that conversation.
We are pleased to announce that we have secured another significant order for STATCOM transformers. STATCOM transformer is crucial for voltage stability and reactive power compensation. This order particularly is prestigious for us. We have now a total of 26 STATCOM transformers in our order book. And with the latest order, we have now our order book position is at 4,200 crores. We are also pleased to inform you that we will be delivering these STATCOM transformers in the next 15 months. This current year, we will be closing at around 2,000 crores. And next year, our lookout is for 3,500 crores total. So we should be touching somewhere around 500 crores back in the next 2 years.
All right, take a short break. Come back on the other side. We get in some technical strategies, trading strategies that come by from SBI Securities. Welcome back. You're watching us here on Halftime Report. Good time to get you an FNO update at the midday. We have the frontline indices which are doing well. The Nifty is holding around that 23,000 mark, just below it now as we speak. It's the IT index which is dragging the index, whereas the Nifty Bank is supporting the frontline index. What's happened over the last 3 trading sessions is that the Nifty has made slightly higher lows, and that's a positive. Today's low was 22,815. Yesterday's low, 22,801. And the previous day's low, 22,725, telling you that maybe we are in the process of bottom formation itself. And every time that happens, as you can see on your screen, the broader markets outperform, and that's exactly what's happening today as well. The mid-cap and the small-cap indices doing well. The advanced decline lines tell you the story of the day. 2,100 stocks which are in the green for about 500 stocks which are in the red itself. The other positive of today's trading session is the India VIX. With the markets moving higher, the broader markets doing well, you would want the India VIX to, come down a little bit. And that's what happened today. Not by much, but even if it's 1.28%, bulls would take that because that indicates some sort of put writing. And that's exactly what's happened at the 22,800 mark after the Nifty has made 3 consecutive higher lows. So 22,800 put fairly active. On the way up though, 23,000 calls still has a lot of writers, and 23,200 call, which has the maximum open interest, comes into play ahead of expiry tomorrow. The key level to watch out for, Nifty Bank holding above the 20-day moving average, the Nifty Bank about 200 points away from the 20-day moving average.
Okay, all right. Well, let's get in. Sudeep Shah, Head of Technical and Derivatives Research at SBI Securities. Sudeep, hi, good day. Good to see you in. After a while, we have so much green on the screen, particularly with regard to the broader markets. What do you think? We're good for more, or do you think lower levels are coming?
Good afternoon, Nigel. Good afternoon, Mangalam. Nigel, I feel we are on course for a relief rally now. The kind of momentum that you are seeing throughout the day, right from the opening first tick, we have seen a lot of volatility, but it was the mid-cap index, it was the small-cap side, the broader markets, which from lower levels, right from the word go, has shown some kind of a recovery and from oversold zones. So I feel that yes, while the larger, the broad Nifty as well as Bank Nifty might not have that bigger move, but decent enough rebound rally could be there in mid caps as well as the small caps. And coming to Nifty levels, 22,800, 22,750 zone now becomes a very important support. Last few days, the indices have been holding that. And even the last week of January, we have seen that bottom holding out. So I feel that Nifty, till it holds 22,750, 22,800, could rebound back up to 23,300, 23,400 in the coming few sessions.
Okay, not ruling out a bigger bounce from here, so that's good. Okay, Sudeep, what about individual stocks? What are you tracking?
Nigel, the first stock that I have on my radar is HDFC Bank. Now, we feel that with the Bank Nifty outperforming in the last few sessions, HDFC Bank plays a pivotal role here, and we expect Bank Nifty to move up to 50,300, 50,500 in the coming few sessions. So here we feel that HDFC Bank, which was doing well in the last few days, we have seen good follow-up action also from lower levels. Could move up to 1770, 1790 zone. This could be bought with a stop loss at 1700 on the downside. And one mid-cap stock that we like, and that has been outperforming even the mid-cap indices also, is Taj GVK Hotels. Now here the stock is on an uptrend. Last several few days, the entire trading range has been engulfed. And we feel from here, 395 would act as a decent stop loss, and the stock could move up to 435 to 450 levels.
All right, Sudeep, thank you so much for joining in and giving us your stock picks and individual, indices as well in terms of call. Let's move on. Before we take that short break, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations now open. All you got to do is scan that code and submit your entry for the SME Champions Award Season 2.
Good to see you. Have you been?
Very good. One of those massive roads today.
So much longer, much more. Well, 2025 is like a very one time.
Is an IPO the next logical step in this journey?
I think it is the next logical step. When we need to take that step, I don't know. We have been very cognizant about getting investors who are as excited about every part of our vision as we are.
You don't have managers in the company?
We have what we call coaches.
Yeah.
We take a very coaching mindset into people's growth at Canva. Part of our grander plan of the two-step plan, which is step one, build one of the most valuable companies in the world, which we're well on the way to doing. And step two, probably the more important step, is to do as much good as we can.
Interesting.
We're up to 24 million paid subscribers. now, so
Breaking
grows pretty rapidly.
Not just law, but a little bit of DJing in your previous avatar as well.
I've not given up on it. It's still a distant dream, and I inflict it on every Canva party that we have. I have to get up and DJ.
You're the DJ, is it?
I am, yes.
Welcome back. Since the broader markets is doing well, let's focus on a couple of names. Venus Pipes, that stock is surging in trade. Investec, they have initiated coverage with a buy rating and a target price of around 1,665 rupees a share. They note that the stock trades at around 9.7 times EV upon EBITDA, which they believe offers significant upside. And their target price is at a multiple of around 14 times. They anticipate that the EBITDA CAGR over the next few years will be roughly around 21%. Now, they're making three big points. First up, they say that Venus has increased its stainless steel pipes as well as tubes capacity by around 3 times over FY23 to FY24, which helped the company increase its market share to around 7%. They also point out that their volume growth has outpaced every other player in the industry, as they've reported close to 33% volume growth over the last 5 years or so. That's between FY19 to FY24. Going ahead, Investec, they expect Venus growth momentum to continue. They are building in roughly around 20% volume growth over the next few years on the back of capacity expansion in both welded as well as seamless capacities. Point number 2, they point out that Venus has focused on backward integration, which has boosted the profitability. The company has its hollow pipes capacity, which serves as a raw material, and it's helped it de-risk from dependency on imports, and that's what's aided profitability as well. And because of this backward integration, they have realized cost savings on an EBITDA per ton of around 56% in FY24 if you compare it with FY22. They've also pointed out that there was an anti-dumping duty on hollow pipes, which would have impacted profitability. But this particular headwind was avoided because they're backward integrated, and it's resulted in strong profitability. Finally, they know that the company's expansions will come on stream in the coming year, that's FY25 as well as FY26. They're expecting the ROCE to decline from around that 19% that was reported in the previous fiscal year, that's FY24, to come down to around 17 to around 19% in the next 2 fiscal years. So putting all this together, the stock is excited in today's trading session. Need to keep in mind as well that the stock has seen a sharp correction from the recent peak, but now Investec believes that it's come out to attractive valuation. So that's why they've initiated coverage on this name.
All right, so that's about Venus Pipes. The other one that I'm looking at is TTK Prestige, because the board yesterday approved an investment of nearly 500 crores towards operational and capital expenditure for the company over the next 3 years. It starts from the fourth quarter of FY25 itself. The funds will be deployed over the next 3 financial years, with 300 crores going towards capex and expenditure towards operating, which is basically branding, positioning, strengthening their distribution chain, etc., being about 200 odd crores, to which the company has also said it may result in transient impact on operating EBITDA margins over the next 8 quarters. Now, assuming that this 200 crores is equally deployed over the next 8 quarters, it makes about 25 crores per quarter, which is about 3.5 to 4 percentage points of margins being eroded. So that is something that they're preparing the street for, but they're saying that this would strengthen the brand going forward itself. So the street is looking at the brighter side of this and not at the EBITDA margin depletion over the near future, but the fact that the company is going ahead and strengthening its position both from a capital expenditure and an operational expenditure standpoint. The stock holding up mildly in the green, though like all other stocks, this one too has seen a cut from the highs. Take a short break now, come back on the other side. We have Manisha Gupta joining in with Colin Shah, who's the MD at Kama Jewelry.
Welcome back, and joining us on the show now is Colin Shah. He's MD Kama Jewelry. Colin, hi, thank you for joining in. With gold so volatile and near all-time highs, how is the jewelry demand and investment demand looking like right now?
Thanks, Manisha. So due to, I guess, the threat of tariffs and everything which is happening globally, gold continues to be a safe haven. We are seeing a lot of physical gold actually being transferred to the US from UK. And there's a slight shortage in global markets about getting physical gold. The investment demand continues to be strong globally. and in India, keeping in mind that, I guess between the dollar and gold, these are the two safest havens maybe left globally. So we're not seeing any dip in investment demand for gold. Actually, even the exports have been significantly double-digit higher in the month of January for gold jewelry.
For the Indian retail jewelry markets, how is that looking? Because there are reports on how that is not doing so well.
Indian retail has been slightly soft. Again, that's due to the high gold price. See, our consumers, used to buying at dips. It's a little evolved, I would say, gold consumer, since they've been so much into investment buying since many, many decades. So every time there's a dip, we see a slight, I guess, increase in walk-ins at retail stores. And whenever, the gold rate goes up, they are in a wait and watch mode till the gold price stabilizes. So right now, we've seen this spike from 2,700 levels to 2,900 levels in the last few months. And the minute the consumer sees that at 29 or 3,000 levels, it stabilizes, I think Akshaya Tritiya onwards, the Indian consumer will be back to buying gold in a big way.
Colin, also talk to us about the prices itself. I mean, as you said, when prices stabilize around 2,900 or 3,000 for that matter, because when you look at various reports, we're looking at a range anywhere between 2,500 on the lower side to $3,300 an ounce on the higher side. What's your own range for this year?
My own range is that the 3,000 level will come quicker than we think it is. We last year, I would say Diwali time, thought that, we may reach 3,000 by this Diwali. But I guess with the change in regime in the US and with the way Mr. Trump's been going about tariffs, gold has been going up. It's in a bull run, 3,000 levels. Now we think will be before Akshaya Tritiya. So it looks like it's going to cross that barrier in the short term, not so much long term.
All right. Colin, for a company like yours, where you are into gold and diamond and domestic markets and exports and lab growns as well, how are you positioning yourself with so much uncertainty, not just in the global markets, but some bit of that in domestic markets as well? So what really is your vision for 2025?
Our vision, thanks. That's a good question. But not only me, but I guess most jewelry manufacturers, we're probably that generation which saw in our 30s and 40s, many stable years where gold used to be at 325 and natural diamond prices went up 3 and 5% every year. But since the last decade, I guess we're now used to volatility in gold, natural diamonds, price volatility, and lab grown coming in a big way, and gemstone pricing going through the roof. So as a manufacturer, what we're doing, and we continue to believe strongly in, is design is still key, whether it's any category of jewelry. So we continue to invest heavily in design and work closely with our customers on co-creating exclusive collections which excite the consumer, because jewelry as a category has only grown year on year. We're also seeing a big shift towards premiumization and customization. So as a company, we're definitely part of that whole universe. And another thing which I guess, Kama and most manufacturers are doing today is they manufacture gold jewelry, platinum jewelry, silver jewelry, natural diamonds, lab grown, and gemstones. So if you're
is that diversification really good, Colin? Does that keep you afloat and in profits?
Yes, it does.
Okay.
It does. It keeps us afloat. It keeps us profitable, sustainable, and we are able to quickly, I would say, adapt to the changing consumer also globally. See, it's not only our industry, it's the consumer also. It's all about the consumer at the end of the day. And globally and in India, they're changing much more rapidly, I guess, across industries. And our industry is no outlier to that.
Colin, what we hear in the past many quarters now is most of the companies increasing their presence in sense of number of stores and a number of themes and designs, etc. In a market like this, how is that working out?
See, in a market like this, like India, we are still, I would say, if you take the large chain stores globally, they would have typically between 1,000 to 2,000, 3,000 stores in a particular country. In India, we're still seeing even the largest chain at 400, 500 stores. So I think there's scope of growth considering our population size of easily being at least in $1,000 to $2,000 as long as you're in every metro and B and C town in the main street, high street or the mall. So there's still, I think, long runway in terms of number of stores which are going to be opened in our industry.
Colin, you talked about various kinds of various precious metals in sense of jewelry as well. So with gold prices where they are, have you seen silver jewelry do better than silver articles and silver artifacts?
See, there's separate categories. So there's a consumer who wants to buy diamond jewelry and, whether that's natural or lab grown, and they will buy that category. There is a consumer which buys polki and they buy polki and natural diamond jewelry. And then there is a consumer which is, only buying gold jewelry. And that I would say is the majority in India today. 80% of the jewelry being sold is still very much, yellow plain gold. So that customer is not the same customer for silver. Silver is a little younger profile, teenagers, college going. And I guess once they reach a certain threshold in income level, they move to gold. So we're not seeing cannibalization of silver into the gold category, but silver by itself is growing tremendously, not only in India, but globally, because of the versatility that it offers in terms of designs. There are many kinds of, and especially in the fast fashion segment, kinds of jewelry, which is only possible in silver. So that itself is giving the whole category a big boost.
Great one, Colin. Thank you so much for joining in. We'll reach out to you when we need either silver, gold, or white gold jewelry as well. Manisha, thank you for taking us through with that conversation. We take a short break, come back, focus on the markets once again. Nifty's just about moved into the red. Welcome back. There's a fresh bout of supply coming in for the Nifty at high levels once again. 23,030, 23,050 is where, the highs are facing some supply. And this one comes in from a couple of, FMCG names. So we have HUL, which has moved to the low point of trade. Giving it company at the lower end of today's trading session is Nestle India as well. But look at Bharti Airtel. The stock did okay-ish in, the open. From there, it's seen a bit of a sell-off, currently at the low point of trade for Bharti Airtel. And then we have a couple of these steel names as well. JSW Steel, for instance, has given up some of the gains from the morning, currently sitting with a mild cut from the highs. It's corrected about 1.5%. And that's exactly what the view of a lot of market guests are, is the fact that it'll be a challenging year. 2025 will be a challenging year for markets in particular and Indian markets in specific as well. Sridhar Sivram of Enam Holdings says that FY26 earnings estimates are also expected to be revised downwards after the 2 or 3 weak earnings seasons that we've seen so far. Let's hear him out.
25, there's a lot of uncertainties, and Trump being just one of them. So what happens to tariff, how that plays out in the market. I think currency is the other issue, how our currency plays out. And my fear is that the currency can take the market up or down. If we have a stable currency, then the markets can be stable. If we have a volatile depreciating currency, if China does anything. So many variables. So in my view, 25 could be sort of the negative year. We had had 8 positive years, and it's highly possible that 25 is the year where we get negative returns. Micro will dominate. Macros are not very favorable. Let me put it that way. Years we had significant outperformance. That has reversed in FY25. We think that FY26 numbers could also get revised downward because there is some slowdown in consumption. We saw the FM also using the budget to boost consumption. So there is some slowdown in consumption. So gold has matched, stock returns over a very long period of time. So I'm not so worried about what happens in the short term. It's an asset allocation. I'm still very bullish.
All right, even as, the frontline FMCG stocks are seeing some bit of decline, look at Jyoti Labs. Jyoti Labs actually a stock which is corrected about 40% from its highs is now finding some buyers at the lower levels. That stock has moved higher at the high point of trade. Remember, the third quarter results were actually top quartile when it came to, their performance. So the stock doing well. Barring that, the Nifty is just about hovering around the flat line because of the stocks that I spoke about, putting some supply pressure at the top. We wrap up on this edition of Halftime Report. On the other side, Business Lunch comes up with all the market action ahead.